Greeting once again and welcome to part 2 of this funding program where we started yesterday. So today we're not going to be talking about how to create your account. I've already made a lesson on that and I'll make it available to you guys, all right, in the community. So I just want us to be very brief because today we're going to be talking about the rules of TenTrade because this is a prop firm that we actually working on, all right. Yesterday we talked about before you can be able to sustain an account or you get funded, you have to follow the rules of every prop firm, which is the most important thing first. All right, you need to understand the rules of the prop firm that you're trading before you can be able to do what, to pass the evaluation. If not, you're going to breach the rules. All right, now what are these rules? These rules here are there to guide you to trade professionally. All right, if you want to trade like a gambler, you should maybe deposit on your normal broker and then on the normal broker side of it, and then you gamble your funds away. But if you want to trade like a professional trader, if you're intentional about your trading, you have to follow rules. All right, these rules here, they are not here to bring you, they are not here to for your disadvantage. Instead, they are here to help us, to make us to trade professionally, to help us to trade like real traders or to trade intentionally. You should not be that type of a trader that you're going to be having a $1,000 account and they discover you trading a 10 lot, which is not proper, right? So these rules here are to help us trade accordingly, trade professionally, following rules with clear discipline. All right, so we're going to be starting first with the instant funding account. You can see here that we have various accounts. TenTrade offers from micro accounts right up to the master account. When you go right up to the master account, it is you have, which is $500,000. All right. So TenTrade offers account. Even with this $500,000, you can buy 2 of them, which means you can get funded at up to $1 million. But with this particular account on the instant funding, you need to request for it actually. All right, now let's start with the first one, which is the micro, which I'm going to be recommending the micro and the mini and the bronze, all right, for us, so that we start with this one. As we get familiar with it, you taking my setups every day, we can now scale up to 30,000, 90,000, 270,000, and up to $500,000 together. All right, so the first one is the $1,000 micro account. So what are the rules of this instant funding? We're going to go through it. All right, so this is our account sizes from here. And now monthly target. Since it is an instant account, it has no monthly target. All right, it has no monthly target. Now, a standard payout is after 15 days for an instant funded account. The standard payout day is 15 days. Now, after 15 days, if you're having a standard account, after 15 days, you are going to, if you've made profits, you are going to be having your share directly. Now, one thing about this instant account is that there is a scaling option for you. And this scaling option applies only on the bronze upward, okay? Which means that if you want to scale up, or if you make 10% profit on a bronze account, which is this one with the 10,000, let's say you buy a $10,000 account and you make 10% of it. If you don't want to withdraw it, or if you don't want to receive a payout, you can scale it up. All right, you can scale up to 30,000. If you have 30,000, you can scale up to 10,000. You can scale it up. All right. But for the micro and the mini, you are not allowed to scale. All right, the scaling option is not available. Now, the maximum drawdown for the micro account is 9%. Now, this is just there to guide you so that you don't risk too much. It's not necessary. That's why when I keep telling people that flipping of accounts, like trying to risk your entire account in a particular trade, is not a professional way of trading. That's just like you are simply gambling, or you are trying luck, which is not proper, right? Good trading is with risk management. So these rules here are to help you manage your risks. Now, the mini, maximum drawdown for the mini is 9%, for the bronze is 8%, for the silver is 7%, and for the master and the diamond is 5%. All right. Now, the daily drawdown, which is 6%, for the micro right up to the silver is 6%. Now, if you notice, most prop firms, I think almost all their daily drawdowns is 5%. Then TenTrade is offering 6% as your daily drawdown. Okay. Now this I'm going to be showing you guys a calculation that is actually very good. Like if you buy a $1,000 account, 6% of that account is about $180 like that. $180. That's for your daily drawdown. All right, now we're going to see how much the account is going to cost, but for now, understand that the drawdown is 6%. Okay, let me just scroll down a little. Now, the maximum daily drawdown for this account is 6%, and for the master and the diamond is 3% for the daily drawdown. Now, minimum trading days is 5 trading days for the minimum right up to the diamond, and then from the diamond to the master is 10 days. This means that you have to trade for at least 5 days before you can request a withdrawal. Now, one thing about this, guys, is that if you make 10% within these 5 days, you can request for a withdrawal. All right, you can request for your withdrawal immediately after 5 days. So, which means because the standard payout is 15 days, but if you make 10% profit within 5 days, you can request a withdrawal and it will be given to you. Now, this is the most important rule that we have here, which is the consistency rule, and it applies to all these instant accounts. So we're going to look at what this consistency rule is about. All right. Now, the minimum trade size for this account is as follows. We have 0.01, 0.01, right up to this one, which is 0.05, and then for the diamond and this is 0.5 and 1 lot as the minimum trade size, right? Now, the leverage on Forex and all the rest is 1:100. Now, profit split 70 on 10 on all the accounts. Registration fee for the mini account is what? $43. So what this actually means is that you're going to take $43 and you get a $1,000 account. Now, there's a particular calculation for this, right? Now, let's say you have $43 and then they give you a $1,000 account. Now, this $1,000 account has a maximum drawdown of what? 9%. It has a daily drawdown of about 6%. That 6% is like $60, right? So which means that if you want to deposit even $43 to your account to risk in a whole day, you can as well get a profit which will give you $60, all right, which will give you $60 to risk in that particular day. And if you risk in that day, you still have another $60 again to risk. You still have another 3% more to risk the following day. All right, so this is actually advantageous to you even if you want to trade only your personal funds. All right, now for the mini account, it's $110 for the bronze, which is $10,000, and the silver we have 230, 909. Now this is slightly expensive because it is an instant account. Like you can see here, this master account, which is 500,000. This means the profit that you're making here is already withdrawable, right? Now, which is $11,000. It's quite expensive because it's an instant account. You don't have to go through the evaluation again. Once you buy the account, you start trading, you make profits, you are able to withdraw immediately. Now, looking at the evaluation account, the evaluation starts on the mini account. All right, evaluation starts with the mini, and this mini is $3,000. Now, the sign-up fee for this evaluation account of $3,000 is what? $32. So you need only $32 to get this $3,000 profit account. Now, with the 10,000, you need 106. With 30,000, you need 280. 90,000, you need 439. 270,000, you need 1,097. Then $500,000, you need 1,650 to get that account. Now, with this evaluation account, you need to make a profit of 10% each before you can become funded. It's a one-step evaluation. You only need to make 10% and then you get funded. With FTMO, you have to make 10% phase 1. They give you phase 2 again, you have to make 5%. Right? But with TenTrade, you just have a whole 10% to make, which is just one phase. Once you make the 10%, you are funded immediately. Okay. Now there are no monthly fees. All right, no monthly fees. Now you have the daily drawdown. Daily drawdown for the mini 6%. Same for bronze. Same for silver. For the gold, the daily drawdown is 3%. Diamond is 3%. Master is 3%. Okay, this 3% is gonna be like $30,000 for this one. 500, right? So that's a lot that you can be risking in a whole day. With this one, with $500,000, you are not even supposed to come close to 0.5% risk in a day. You have to know that this lasts a lot of money. All right, 1% of this is about how many? Should that be 5? I think. What is let's say, what is 3% of 500,000? Put that on the chart. Let's see the answer on the chart. Now we have overall drawdown, which is 9%, overall drawdown for bronze 8%, overall drawdown for silver, and then for diamond and master 5%. Now minimum trading days is 5 days, and 200 diamond and the master account is 10 days. This means that you can use 5 days to pass your evaluation. All right, you need at least 5 trading days to pass your evaluation. Now, it also has a consistency rule. I remember I said we're going to be explaining this consistency rule, right? The available leverage is the same, 1:100. So these are the accounts that are offered on TenTrade, both on the instant and on the evaluation. We have talked about the prices, right? Now, 3%, okay, 3% of 500,000 is $15,000. Yeah. All right. So you cannot be actually risking $15,000 in a single day. All right. So this is very, very important. Very, very important. I mentioned something yesterday that if you are trading this particular capital, if you are trading this amount, even if it is just $1,000, consider that somebody came up to you and said, okay, I want you to manage this $1,000. Put in serious risk management procedures in place, trade it with proper discipline, and you're going to be successful. One thing that makes traders to fail is because when they buy an account of 3,000, they just blindly go into it. They don't have any plan to trade. They don't have even a good strategy. They don't have any risk parameters. You're just trading randomly. It's not good, right? You see people opening trades left and right. That's not how trading is done. If you have a $3,000 account, forget that it's a profit. Consider, put it in your mind that this is 3,000 that someone has given to me to manage it. And if I manage it properly, we're going to be sharing the profit 70-30. That is it. If you put it like that in your mind, you are going to be conscious of the type of risk that you're going to be taking on that particular trade. All right. So I just want us to go straight. If you want to know how to get this account, I think I said I'll show you guys the video. All right, which are how to create your account and all those things. Now, if you want to get it, you simply just have to fund your account. All right, you fund your account, you deposit funds. It's going to be on your wallet. After that, you just come to apply, which is under funded trader. You apply here. Once you apply, it's going to bring you to this page, and then you select. All right, you select the account that you want. If it is evaluation or instant funding, if it is instant funding, you select instant funding. You come here, you select the amount that you want, right? The account size that you want, or the amount of money you have funded your wallet with. You click it, you select here, and after you select, let's say you want to get that, then all you have to do, you go right down and then you click continue. From there, you're going to pay. Yes, it's going to be deducted from what? Your wallet. In this case, you don't pay like FTMO where you have to go to Bitcoin and send. Already, you have funded your wallet already. Okay. Now let's go to the whole PDF of this of the risk parameters, of the rules and regulations of TenTrade. All right. So let's move on to that one now. If you have a question as we're moving on, just ask so that I will answer it right away. Now, many of you have been asking if TenTrade is regulated. TenTrade is actually regulated, like I said yesterday, under the FCAA on associations under Avalanche, right? Now, our funded trader program is the perfect way for you to benefit from trading with our money and enjoy the fruits of your success. So we're not going to be talking so much about this. I just want to go straight directly to the rules, all right? Now, they have TenTrade Express evaluations and instant funding. We have already talked about that. We have you can trade up to $500,000. We've talked about it already. These are the various account sizes for the evaluation phases. It starts with what? $3,000. You're just supposed to make 10%, 10%, 10% on all of them. So which means that if you actually buy $500,000, how 10% of $500,000 is how much? Put that on the chart. Let's see. What is 10% of 500,000? Now, if you, which is I think it's 50,000, right? 10% of $500,000 is 50,000. So which means if you buy this account of 500,000, you just need to make $50,000, and after that, the account is yours, right? And any profits that you make on this account now, you're going to be sharing it 70-30. Okay. Now these are the overall drawdowns of these accounts. For the first one, which is 3,000, the overall drawdown is 270. From 10,000, the overall drawdown is 800. From 30,000, the overall is 2,100. From 90,000, the overall drawdown is 4,500. And 270, 500,000, the overall drawdown is 25,000. Minimum trading days 555. We've already talked about this one. Same with this one, the leverage and so on. The profit split, all right, is the profit target is 10%. Daily drawdown, we've already talked about all this. Now, always make sure that you calculate your daily drawdown, all right, before you start trading. Know that this is your daily drawdown for the day, okay? Their consistency rule, what does it say? Okay, good. That's what we are driving at. That's the main two rules I want to let you guys know, all right? The profit split is 70-30. Now, let's move straight up to the consistency rule. Now, this is the consistency rule. Take note of this one. This is very, very important. Now, trading inconsistent lot size on an evaluation account that is in overall loss as an excuse to request another chance is not acceptable. Now, using the starting lots as reference, traders can reduce lot size on subsequent trades by 50% of the starting lot size. Now, when they're talking about the consistency rule, they just want to see how you are using your lot sizes. It should not be that your first lot size is going to be one lot, and then they want to see their second trade, you are opening 10 lots. This is like inconsistency with lot size, and it's not a good trading habit for traders, right? So this actually means your risk management is not actually in place, which is not proper for a trader. Like I said, prop firms, they are actually here to make sure that traders have those good habits, all right? For me personally, even if I'm trading my normal account, if I'm trading a lot size range of one lot, I will not be able to, I will not even want to go to open 10 lot or 5 lot, all right, based on my account size. So this is very important. This consistency rule, it gives you a range of lot sizes that you should be trading within, all right? Now, this lot size range that you are trading within is as with respect to the first lot size that you open with that particular account. Let's say, for example, that you bought a $10,000 account, right? You bought a $10,000 account, and the first lot size that you open on that account is what? One lot. That's the first position that you open. Now, this first position is going to be the reference lot size for that trading account. It's going to be the reference lot size for that trading account. And the consistency rule states that you can reduce this one lot by 50%. You can reduce this lot size by 50%, and you can add to this lot size by 400%. Take note, which means if you want to take a trade because your stop loss is big now and you don't want to open one lot, you can reduce the lot size by 50%, which means you can reduce right to 0.5. Take note of that. If your first lot size was one lot, that is going to be the lot you are going to be using as reference, which means since you started using with the one lot, you can only go down 0.5. You are only going to go down 50%. All right. You are going to reduce this one lot by 50%. And if you want to increase your lot size, maybe now your stop loss is tighter, or you have an A+ trade and you want to increase your lot size, you can increase this lot size times 4. This is it. Using the starting lot as reference, trader can increase lot size on subsequent trades by 400%. All right. So which means you can multiply this by 4. That's 400%. So which means that since you started with one lot, if you want to enter a trade that your stop loss is big, or you are entering the trade that is not a very good high probability trade, you want to reduce the lot size, you are bound to reduce only by 50%, which means you'll be trading 0.5. Now, if you want to increase the lot size, all right, if you want to increase the lot size, maybe your trade now is good, you have to increase up to 400%. That's the maximum. Now, 400% of this one is going to be what? 4 lots. So it means that you are allowed to trade up to 4 lots since your first position was 1 lot. So this means if you trade 5 lots, you have breached the consistency rule. Now, this is not, your account is not like your account is going to be flagged like you have breached the account, you are going to seize the account. No. All right. This is just a breach, and the payout is going to be denied, and you have to trade again. All right. So what I'm simply saying is the simple way to go about this rule is have a consistency, be consistent with the type of lot size that you are using. It's as simple as that. This is the best rule that I've seen in trading. It helps you to be mindful of the lot size that you are using, because I see many people that blow accounts is that you're going to see somebody trading with 0.01, and in the next minute you see the person trading one lot, and you eventually blow your account because of big lot size that you are using while your account was small. So this consistency rule is here to help you as a trader to be able to manage your lot sizes, to be consistent with your lot size. So for me, when I'm trading, what I'm going to do is I'll calculate, all right? If my average pips is going to be 10 as my stop loss, I'm saying, okay, if my stop loss average is 20 pips, and I discover that, okay, if I'm using one lot, I'm going to be risking like 0.5% of my account with one lot, then I can decide to be using only one lot, or I can decide to use two lots. All right, I can open my first trade with one lot. The second one, I can decide maybe I open with two lots. Now, I know that my maximum is going to be four lots. I'm not going to open a lot sizes that if they add them up in a single trade, it should be more than four. Which means that if you have running trades, if you open 5 running trades with one lot, it's going to be a total of 5 lot, which is a breach of the consistency rule. This is about stacking. This is about stacking now. We're still going to go down and I will show you about the stacking rule. Now, this is just to help you as a trader, all right? Be consistent with your lot size. This is not something that you should be bothered about. Just know that, okay, if I'm starting this account of 10,000 that I bought, or I'm starting this account of 1,000 that I bought, this is the lot size that I'm going to be using. I'm going to be using only 0.05 on this account. That's all. If I don't want to use 0.05, I'm using 0.10. That's all. Don't be mixing stuff. Don't be mixing too much of your lot sizes. It's not good. Does this consistency rule applies to all account sizes, or in different, it differs too? It applies to all accounts. All right. It just depends. This is what I said. Your first lot size on that account is what the reference is going to be. All right. So if you buy an account, be mindful of know the first lot size that you're going to use. Don't buy a $500,000 account and you go and you start with 0.01. If you start with 0.01, this is too small, and 400% of this is still going to be 0.04. You cannot be trading $500,000 with this type of lot size. Maybe you're going to be starting with 5 lots, all right? And 400% of this is going to be how many? Then 50% of this is going to be 2.5 lots. You understand? That's how you do it. That is how you do it. You calculate first. You sit down, okay, I'm going to be using this type of lot size to trade my account. So this is the lot size I'm going to be using. Just 2 lot size is okay. Within the range of the first lot size that you use as your reference, remember I said, okay, now, if your first lot size is what? 0.01. Now, with this one, you cannot reduce it again because this is already the lowest. This only means that you can only add 400%, which is times 4. Which means your maximum lot size that you can use here is 0.04 in this case, because you cannot increase it again. All right, you cannot increase it again, and you cannot reduce. You cannot reduce because it's already the lowest, and you can only increase by 400%. Now, as I also mentioned, that the stacking rule is that you should not, if your first lot size was 0.01, you should not stack like 10 0.01s. If you add those 10.01s, they're going to be more than this. So which means that you can actually stack 0.01, 0.01 4 times, and it will still be within your consistency rule lot size. All right? Don't stack 20 0.01 saying that it's not 0.04. It's not like that. It's still going to be the same calculation. This is when your trades are running. So you can enter 0.04, you close it, you enter another 0.04, you close. If you close, you enter another one. That is the rule about consistency. That's the consistency rule. Be mindful of the first lot that you've used. All right, so let's look at some examples here. Now, this is an example here. They say consider a $10,000 evaluation account with a profit target of $1,000, which is 10% for evaluation. You have successfully hit your 10% profit target of $1,000. The profit was made within 5 minimum trading days using the following positions. Now, take note here. This is going to be what? This is your first lot size, which is going to be like the reference. So which means if we're dropping down out of this lot size, it should be what? By 50%. If we're going down, we should be going down 50%. If we're going up, it should be 400%, right? Now, 50% of this downward is going to be this one. It's going to be 0.2. Now, 400% of this one is going to be this. So this is actually a proper way of trading. So these are the lot sizes that this person has used to make this $1,000 profit. So there is no problem here. He has not gone below 50% and he has not gone above 400%. You understand? So this trading pattern is consistent and adheres to the consistency rule. So this is not a difficult rule. It's just to help you to manage your lot size properly as a professional trader. You should not be just jumping from, that is, you enter 0.05. Tomorrow they see you entering 0.01. It's not proper, right? Now, let's look for another example. Okay. The profit, this is another example. You continue to trade, to cover up. Excuse me. All right, let's look at this one. The second example. Consider a $10,000 evaluation account with a profit target of 1%, of 10%, which is $1,000. Now, you have successfully hit your 10% profit target of $1,000, but the profit was made in one trading day using one position of 2 lots. Take note. Using one position of 2 lots. So you made $1,000 only on one day using what? 2 lot size, right? Now, to continue to trade with 0.01 to 0.99 lot size deliberately to cover the 5 minimum trading days. Remember, they said you have to at least trade for 5 minimum trading days, right? Now, you entered with a heavy big lot and you made your profits. Now you have to trade again to cover the 5 days. Now you started trading with what? 0.01. That's already out of the inconsistency rule. So this is how it looks like now. Your first lot size was what? Your first lot size was 0.2. I mean, your first lot size was 2 lots. So which means if you are going down 50% of this, it's going to be 1 lot. And if you are going above, it's going to be 4 lots. But now you start trading with 0.01. You start trading with 0.01 to cover up the next 5 days. This trading pattern is inconsistent and it violates the consistency rule. Now, the result of this is that all profits on the account will be forfeited and the funded trader gets another chance to start from the initial evaluation capital. So if you make such a mistake, your account, your profit is going to be forfeited and you'll be given the account to start back afresh. All right, you'll be given back your original capital to start from afresh. All right, so but this is not how you should trade, right? You should not be trading like this. You open 2 lots and tomorrow you are trading with 0.01. It doesn't make sense. This means you could have easily blown your account if you were trading with this type of a lot size and to be later on trading with this. All right, so you have to make sure that you are following proper consistency rule lot size. You are being consistent with your lot size, which means if you started with 0.2, yeah, you could trade 1 lot because this 1 lot now is 50% out of this and 400% is 4 lots. So this is the range of the lot sizes that you can use. This means you can open a trade with 3 lots. It's still within this thing. You can open with 3.5 lots. It's the same. You can open with 4 lots. It's the same. You can open with 2 lots. It's the same. You can open with 1.5. It is the same and it falls under your consistency rule. Okay. Now, this trading pattern, like we've already said, is inconsistent. Let's see another example. Now, order stacking will be monitored and accounted for under the consistency rule. I've already explained this stacking. I've said if you're starting with 1 lot, you can actually open up to 4 lots. But it should not be that you're going to open 1 lot, 1 lot, 1 lot. You open 5 positions of one lot. that's going to be a total of 5 lot, which is more than the 400% that you are supposed to increase based on your initial lot size. All right. This rule, I really like this rule. It helps you as a trader to know that you are going in for consistency. You are building up a habit of a professional trader. It is not this. It's not gambling here. You are building habits of a professional trader. Okay. Now, these are the examples of consistency rule applied to evaluation account on acceptable stacking. Now, this is it here. You stack 1 is you enter 0.2 lots times 10. This is equal 2 lots. Now, stack 2, 0.2 lots times 4. This is 0.8. Now, which of this is not correct? This first one is not correct because your first position is going to be 0.2. And for you to increase this 0.2 by 400, you are going to be around 0.8. I think, yes. Now, this one is not consistent. Why? Because you have entered 10 of what? 10 of 0.02, which is summing up to what? 2 lots. It's already more than that, more than 400% of this. Now, stack 3, 0.2 lots times 4, 8. Stack 4, 0.2 lots times 4, 8. Stack 5, 0.2 lots times 4. Now, the above is a violation of the consistency rule. The acceptable total stacked lot size range must obey the consistency rule. Okay. Now, the acceptable total stacked lot size range is 1 lot to 8 lots based on the consistency rule. Acceptable stacking is stack 1, 0.2 lots. All right. Now, if you open 0.2 lots times 10, take note of that. Times 10 is equal to 2 lots. Now, stack 2, 0.2 lots times 5. Remember that this 2 lot is your original lot size, right? So which means you're not supposed to be going below this more than 50%, and you're not going to go above it more than 400%. That's why if in your next trade, you open 0.2 lots, 5 of them is going to be summing up only to 1 lot, which is 50% below this, which is not bad. Now, if you are TenTrade, you are opening 0.2 lots, 8 of them is going to be summing up to 1.6, which is still not more than 400% of this. All right. Now, if you're stacking 4, you stack 4, you enter 0.2 lots times 40. Now, this is what? 0.2 times 4, 40 is going to be 8 lots. Now, 400% of 2 is what? That is it. It's 8 lots, which means you have not gone above it. All right, that's just simply 2 lot times 4. So what if you are stacking in the range of below 400%? Is it? Yeah, it's acceptable. What I'm simply saying is you don't stack a lot size that when the sum of the lot size is going to be giving you a lot size above your 400% limit, and adding it should not be below your 400%, your 50%. Let me give you an example. Let's say that our first lot size was 1 lot, right? Our first lot was 1. Now, we know that we can go up to 4 lots and we can go down to 0.5, right? Now, already know that you are not supposed to open a lot size that is less than 0.5. So which means that you can open 0.5, open another 0.5, open another 0.5. Like you can open 0.5s that if you sum them up, they will give you 4 lots. Do you understand? You are not going to open 0.4. If you open 0.4, you are already below 50% of your initial trade. All right. So you have to be stacking with the lot size that is relative to what? Your original trade, which is you are using as reference. I think we're going to have a second part of this session, all right, so that I'll explain some other things. So let's just have a short break of 10 minutes, and then we'll come back and I will explain. All right, so we were discussing on the stacking rule, all right? Now, remember I said the easy way for you to go about this is just to do what? Have some particular 2 lot sizes that you're using. which are within your range. Okay, you just have two lot sizes that you are using which are within your trading range, and that is it. That's all. You don't have to suffer, or you don't want to be doing all these calculations that we're doing. I'm just here to make you understand it. But in your trading, just have some two lot sizes that are within your range and use them. That's all. Just know that if you're starting with it, if you want to open the first position in your trading account, if that position is going to be a high probability trade and you are using 0.5 to open that particular trade, know that this is the only lot size that you're going to be using to open your high probability trades. Now, you know that with 0.5, you can go down 50%, which means you can open 0.25 as your lowest lot size, right? Now, you can open multiple 0.25. You can open multiple 0.25s, which should not add up to more than 400% of this initial lot size. So which means that if it's a low probability trade, then you should know that you are not going below this. Right? Maybe you will open 0.3. So just try to be within the range of 50% below your initial and the range 400% below. All right? Don't even try to go maximum. You're just trying to be in line with the rules. You're just trying to be in line with the rules. Just have some few lot sizes that you're using which are in line with the stacking rule, okay? So that you don't make profits and at the end of the day they deny to give your profits because of consistency rule. All right, just make sure that you stick with a particular lot size that you're using. Now, if your first position is one lot, know that you can, if you want to stack your positions, you can open like 4 one lots, right? That means you can open the first position one lot, second one lot, third one lot, and fourth one lot. Know that this is your maximum. If your original position was 0.1, you can open 4 one lots, right? That's stacking. You want to stack it, you want to like 4 times. No, that you don't have to go above, but this is not even good. You can just open 2 positions. All right. Now you know that if your first position is 4, you have one lot, you can go 400%, which means you can open right up to 4 lots. So you can, if your first position is 1 lot and your second trade is so good that you want to increase the lot size, you can open with 2 lots, you can open with 3 lots. Don't even go maybe to open with 4 lots. It's not necessary. Okay. Now with this with this 1 lot, you can come down below 1 lot right down to 0.5. That's 50%. Now, if you're coming right down to 0.5, which is 50%, you can open 0.6, you can open 0.8 lots, you can open 0.9 lots. Don't even try to go too extreme, like trying to be punching the 0.5, right? Just try to be within the range of the acceptable lot size based on the first calculation that you have done. Now, I'm going to give you guys access. If you want to know the type of lot size that you're going to start with on your trading account, I think I should make a short table on it and then I'll send it to you guys on the group, all right? So that it will help you guys a lot concerning this stacking rule, all right? But know that just have some few consistent lot size that you're using consistently. Don't go above, don't go below. You're trying to be consistent here, all right? So let's look at the next one. Now, this is acceptable stacking. Your first stack, this is your first stack, all right? Your first stack is 0.2 lots times 10. This is your original lot, 2 lot, right? So you open, your original lot size was 2 lot. Then you can stack 0.2, 10 positions of 0.2. If your original lot size is 2, you can stack 2 lot, 0.2 lot, 10 of them. They will be adding up to 2, all right? Now, if no, that's not what I'm saying. Now, if you're stacking, someone is writing on my screen, please. Now, if your first position is 0.2 lot, please. If your first position is 0.2 lot, with this 0.2 lot, you can go 400% and you can go down 5%. All right. Now, if the original position, as they say here, okay, this is it. The above is a violation of the consistency rule. The acceptable stacking lot size range must obey the consistency rule. The acceptable total stack lot size range is 1 lot. Let me remove these drawings. 1 lot to 8 lots. Now, this is based on this position that was traded above here. Okay. which was this was the position that was traded. Let's see, on this particular trade here, which was 2 lot. This is, they're talking about the stacking of this position, remember, which was 2 lot. All right, now let's see another good example. I want an example that is very clean. Okay, let's look at this one. Now, the above obeys the consistency rule. The acceptable total stack lot size range must obey the consistency rule. The acceptable total stack lot size range is 1 lot to 8 lot. All right, that means you are supposed to stack within 1 lot to 8 lots based on the consistency rule. Now, the acceptable stacking is going to be like as follows. Now, what this means is that you can start with what? Your first position was 2 lot, right? Now, if you want to stack, you have to be stacking below. If you're going down, that's 50%, which is just 1 lot, right? If you're going above, it should be 8. All right, 8 because it's 400. 400% of 2 is 8. So which means if you are going above, you should not go above 8 lots. If you are going below, you should not go below 1 lot. 400% of 2 lot is this. It's just like the same as 2 times 4. Okay. Now 50% is the same as 2 times 0.5, which is going to be 1. Okay. So which means that if your original position, which is the reference one, if it was 2 lot, your acceptable stacking range should be what? 1 lot to 8 lots. All right. It should be between this range. Now, acceptable stacking, stack 1, when that's 0.2 lots times 10. This accumulates to what? 2 lots. It's still within the range, right? Now, stack 2, 0.1 lots times 10. This accumulates to what? 1 lot, which is still within the range of 1. Now, stack 3, 0.4 lots times 4. This accumulates to what? 0.6, which is still within the range. Now, stack 4, 0.8 lots times 10. This is up to 8 lots, which is still what? Within the range. Now, stack 5, which is 0.5 lots times 8, which is equal to 4 lots, is still within the range. Take note of that. Okay. Now, the one that was above here was this one, which was above, which was based on, because here, let's see, let me remove this joints. Right, okay. How was this example from? Let's see if there's another example. Good. Now, example of consistency rule applied to evaluation account on acceptable stacking. Now, this one has to do with stack 1. We have 0.2 lots times 2. This equals 0.4 lots. All right. Now, stack 2, 0.2 lots times 10. This is equaling. This equals to what? 2 lots. Now, stack 3, 0.2 lots times 4, which is 0.8, is still within the range. Stack 4, which is 1.6. Stack 5, 0.2 times 4, which is 0.8. Now, this one here, you see that it's up to 2 lots. Right? So if your first initial position is 0.4, you should not go up to 2 lots. 2 lots is already above 400%. Now, the above is a violation of the consistency rule. The acceptable total stack lot size range must obey the consistency rule. The acceptable total stack lot size range is 0.2 to 1.6 lots. So you are supposed to stack from 0.2 to 1.6 lots. So this one here is a violation. You have gone above that. So this was the maximum 1.6. So based on the consistency rule, so this is the acceptable stacking. 0.2 lots times 2, 0.4, and the highest one is 0.6. Okay. This is about it. One thing about trading, I've been trading for quite a long time now, and I will tell you that stacking is not so much something that you should be so much interested into. All right. Stacking is mainly for people that want to flip accounts. All right. Like you just enter that. It's good that you calculate your lot size, you enter it once, and that's it. All right, but I'm going to make a small table with all these things and how you can stack your positions in it so that you will help a lot, you guys a lot. All right. Now, someone said, meaning if you multiply your lot by 400% already, you can only take one position. Yes. If your first lot size was 1, right? If your first lot size was 1 lot, then you multiply 1 lot by 400%, it's going to be giving you what? 4 lots. So you can trade 4 lots, but not, you don't go above it. But it should be that your first lot size was already 1. Before now, your second trade, you can be entering with 4 lots. You understand what I mean? If you just come in and you enter your first position as 4 lot, that 4 lot is going to be used as reference, which means you can only come below 50%, which is 2 lots, and you go above that. Yeah. But I have a question here. This 70-30 profit sharing, who takes 70 and who takes 30? You are the one that is going home with 70%, all right? Both on the instant account. It's not 50-50. Instant account, you are going home with 70. The broker is taking 30%. All right. So I think that's all about the main rules that concerns us. Expert advisors, lesson, arbitrage, manual trading. The money. Okay, go. This is another important rule. 3-minute rule, guys. This 3-minute rule is a hidden rule. Let me tell you guys a secret. Every prop firm has a secret rule that is the host traders. Every prop firm has a secret rule. All right, where they bring it to at least hold those people that want to make millions within seconds. I am telling you something. All of them, even for the next, all of them, they have that particular hidden rule that will make you to not to cash out all the money in the account. All right. So the minimum holding time limit is 3 minutes. This is a way to breach this. All right. This is the best way to go about this. If you open a position, you are not allowed to close that position within 3 minutes. If you open a position and 3 minutes has not passed and you close the position, you have breached this rule. All right, you have breached this rule. And for some brokers, they have lot size. You trade like that, you go to withdraw, they just say, you use a big lot size, which was not supposed to be there. They did not tell you from the start. All right, but this 3-minute rule is a very easy rule. All you have to do is, if you mistakenly enter a position and you want to close it back, just shift your stop loss closer to where the price is currently sitting, and that's it. If price hits your stop loss, you were not the one that closed it, right? They will know that price hits your stop loss, because now you cannot defend yourself that, okay, price hits stop loss. It's normal. You can enter a position, price hits your stop loss within 1 minute. You understand what I mean? It's very, very important. Take note of this 3-minute rule. Enter a position, if you want, enter a position mistakenly, or even if you want to scalp, if you enter a position mistakenly and you want to close it, just put a stop loss that is tighter to price and then let price hit your stop loss, or it hits TP and then it closes the trade. Don't close it manually. If you close it manually, your history will not show that there was a stop loss there, and the robot that is checking your account will not see stop loss and will breach your account, will say that your account breached the 3-minute rule. All right, this is very important. Take note of that. Just shift your stop loss to the current price so that price will hit your stop loss. All right, that's just it. So you have third-party copiers, refer and end affiliates, all these other ones. They are not really interested for us. Okay, those are the main rules that there are so many bad trading methods that these guys don't want to tell us. They don't want us to use arbitrage and other prop firms. This is like cheating. They call them cheating. How about hedging? No, hedging is not good. Hedging is not good. Hedging is like you enter a buy and you enter a sell. It's not good. That's cheating. And also, you can enter a buy, like let's say price is here. You sell and then you buy again. Waiting that if price goes up, you close the buy and you close the sell. No, it's not good. All right. Now, another hedging is that you buy 2 accounts. You buy on the other account, you sell on the other account. These guys will know. This one is this was a cheating method that prop firms discovered while they have ranked them a lot. The guys were dealing with them, right? Like somebody will buy 1 account on this one, and then he buys on this one heavy lot size, sells on this one's heavy lot size. If this one is breaching the rules, this guy is going to be making massive profits, right? Because if price is, if the market wants to sell, it means that this one is going to be making profit and this one will be losing. If the market wants to buy, it means this one will be losing and this one will be making profit, and the person will be making huge profits from the one that is winning. That's hedging now with two accounts. That's like arbitrage trading, which is not good. It's like cheating, all right? So those are some trading habits that they don't promote. Trade professionally, trade like a real trader. Okay, tomorrow we are going to be talking about setups, how you can, the type of setups that you can use to trade yourself. Price action, that's what we're going to be talking about. Price action, which is very important. So today I just wanted us to go through these rules. 70-30 is a profit split. We have explained everything. I don't know if you guys have questions. If there are no questions, we can call it a day here. All right. I'm not going to want. I don't want to make these videos too long. So tomorrow we're going to be looking at various setups that you can use to pass your evaluations, and how you can, news trading. You can trade news. All right, and how you can pass your evaluation, or how you can even take my trades. All right. So prohibited trading strategies are high frequency trading, ultra fast scalping, latency arbitrage trading. This ultra fast scalping is that 3 minutes, right? Now hedging, we do not allow hedging, violating EA. If you violate the overall drawdown of starting balance, these are the only ways that you can lose your account. If you violate the overall drawdown, if you violate the daily drawdown, hedging, they don't accept hedging, violating EA copy trading rules, inactive for 30 days, latency arbitrage. This one is arbitrage. Buy to so many accounts using prohibited trading strategies. Others. So these are the only ones. Any tick scalping strategies, any reverse arbitrage trading, any hedged arbitrage trading, hedging, inconsistent stacking, gambling, and over leveraging. All right. So that's it, guys. That's it. Please, can you help with us with this PDF? Yeah, I'll send it to the group. All right. I'm going to be sending it to the group. All right. News trading. This is news trading. Traders participating in the TenTrade funded trader program are permitted to engage in news trading without any restrictions. All right. So, however, it is important to understand that market conditions during these high impact news events can be highly unpredictable. So that's all. So guys, I believe this was helpful. We're going to continue tomorrow now based on price action, the type of setups, how you can even take my own signals to pass your evaluations and all those things. All right. But from now, I believe you guys can start buying your accounts, $1,000, $3,000, $30,000, $10,000. And always get to me if you have questions. I'm going to be helping you guys throughout this process. We're moving this together. All right. So see you guys tomorrow on the price action. Make sure you don't miss this one tomorrow. Okay. So you guys take care and be safe.